Welcome back everyone to the Money Control live stream. You are watching Markets with Santo and CJ. Where it's a deja vu for investors as just like yesterday, the market started off on a strong foot but has given up all of those gains and it looks all set to end in the red territory as of this moment.
You jinxed it with your red t-shirt, I
Yeah,
would
it
say.
seems like
CJ.
I have jinxed it. But yesterday I was not wearing red, so I don't know if I have jinxed it actually or not. That said, if you look at the Nifty and Sensex, both are now down about 0.5% each after rising as much as 0.5% on the positive side, Santo, at one point of the day. The mid cap and the small cap of the second line stocks are actually taking it on the chin at this point of time. They are the one that have been underperforming throughout the session. And if you look at the volatility has been quite huge, not only at the index level but at individual counters. And if you look at the fear gauge, which is the India VIX Santo, that shot up as much as 9 to 10% in trade and blowing past the 25 psychological level of 25 points, which basically shows that investors are very, very skittish and very tentative and are trying to hedge every bet that they are making in this market.
Well, it's not really surprising the market is behaving the way it has now for quite some time. If you look at just the FI selling in the first 5 months of 2022 so far, that's close to about close to near about $30 billion, which is like a very huge sum, For all that theory about, retail investors, retail money supporting the market and all that, it takes something to absorb that.
But it is supporting the market. In the
Well,
fact that
I
we
agree.
have not fallen, I mean, $13 billion taken out in 4 months. I mean, this would have been catastrophic, right? Once upon a time. But today we are just down still, but down only 12 to 13% from the record
Yeah,
highs.
because see, they've been able to take it till a certain point, but now, when you speak to broking houses, the feedback that you're getting from there is that investors are beginning to get restless because one after the other, the stories are just turning on the head.
It has been a very frustrating market, Santo. I mean, we have not gone anywhere for what, nearly 1 year now. In another 3 months, we will be close to 1 year to the record high. So in that sense, the market has literally not gone anywhere. It has been moving in a range of about 3,000 points, and this is a market, especially among retail investors, who have been used to getting 50%, 100% returns in 2 months, 3 months, right? I mean, when you suddenly have no returns for another 7 to 8 months, that can get on your nerves.
See, and when you say, market has not gone anywhere, you're just talking about the index. Now, look at individual stocks, they've corrected quite fast, and look at the stories just getting appended by the day. Yesterday it was steel, huge losses, or anyone who had
today
exposure.
sugar.
Today is sugar, the government's decision to, cap
Export limit,
exports to about 10 million tons. So all these, so nobody knows tomorrow what's going to be next, as the government has made it clear that it wants to bring down inflation at any cost. So there is, for the first time, there seems to be a bit of fear, So till about some days back, you were seeing buying at lower levels, but now, people are running out of money. So
Absolutely.
direct investment.
I think, Santo, the new sort of fear is now the policy shock that is coming in. I mean, so far we were only concerned about what was happening in global markets, then we were concerned about what was happening with Russia and Ukraine. Of course, inflation has been a larger issue over the past 1 year, so therefore that is not a new monster, so to speak. But now government movements are coming in. We have had sugar export curves, we have had steel curves, we have had excise duty cuts out of the blue. So a lot of sectors which were built on support from policy are now actually, suddenly wondering whether they are next. I mean, you could talk about chemicals, you could talk about other sectors out there who could now be thinking, would we be the next? I mean, cement prices have been dominating the, national headlines for a long time. Could cement be next in line? We do not know yet.
And there is no buying coming in. There is just no buying in this market.
That said, now let's quickly dive into some of the stock action, because even though the market has been a little bit of a disappointment, some individual stocks were actually doing quite well. And first
starting with
is
CJ's favorite.
Yeah, Zomato. Wow, what a move. I mean, after the earnings yesterday, everybody was, a lot of its skeptics basically were laughing to the hilt, in the sense that they were expecting a big down move on the stock today, but the stock ended up surging more than 15% at one point of the day, largely because of the optimistic outlook for the first quarter, as well as some sort of, what do you call it, a qualitative factor, in the sense that the company came out with a lot more disclosures than it has in the previous 2 quarters of earnings results. If you look at what UBS Securities had to say, they believe that the growth drivers for the company are still in place and are continuing to perform well. So therefore, the longer term structural story for Zomato still remains intact, and that is the reason behind their buy call on the stock. Apart from that, a lot of the analysts were also impressed by the capital allocation strategy that the company had to talk about in its presentation, which suggests that maybe it will not be so loose with the capital it has as it has been in the past, such as the acquisition of the controversial acquisition, if one might say, of Blinkit. So in that sense, a lot of some sort of relief rally coming in, given that valuations anyway were beaten down for Zomato. It was at one point of time this month trading at its last private market valuation of about 52 rupees per share, Santo. So therefore, a lot of room on the upside and lot less scope for downside. So I think investors are probably playing that trade, but we will have to watch out whether these are stronger hands that are coming into the stock or just speculatives.
Well, CJ, the way I look at it, there are some positives in these numbers, no doubt.
There are, definitely.
Oh, you would say that. I mean,
Yeah.
you're not just a votary of the stock, but I think you're also one of, you would count among the very loyal customers of Zomato.
Absolutely.
Okay. Now, here's the thing, CJ. I think the market was already kind of, at least the smart money knew what was going to come, you know, this kind of huge losses. Ideally, this kind of losses should have really sunk the stock. But I think a lot of people would have gone short on the stock already anticipating what was coming, and what you're now seeing is short covering, which has taken the stock higher. So in 22, you know, ideally when the lockdown was beginning to ease, they managed to grow their top line handsomely. But you know, of what use is growing your top line if your losses are also growing at the same rate? Now, brokerages have mentioned a few things positive, especially the transparency with regards to, you know, disclosures which the company has made. But well, I think that's a given, right? That's what you're supposed to do.
Yeah.
I don't see that as a very big positive. What investors would really be wanting to watch is that the turnaround, you know, the improvement in the bottom line. And I think till that happens, you're not going to see runaway gains. You saw big pullback today, but will that sustain? I'm very skeptical about that.
I think a lot will
CJ.
hinge upon the 5 o'clock call that management is going to do. For the first time, it's going to hold this analyst call. So that will, a lot will hinge upon what the management has to say there. But in terms of profitability and growth, I mean, the commentary that came in the investor presentation was quite heartening. I believe they did stress that they want to move towards more profitability and ensure that investor expectations are met as much as possible. So therefore, you know, as has been true for Zomato since the time it has listed, while expectations are very high, the entire onus on the management is to deliver on those expectations, and therefore execution is what will remain key for Zomato from my point of view.
Well, I think, CJ, there's been a good improvement in the operating margins quarter on quarter.
It has been sequentially.
Yeah, from minus 46% to minus 40%.
It is, but it's still an improvement. You have to see the positive side, Santo.
Definitely. But what, you know, I can't understand is, you know, so much excitement. Maybe, yes, the stock is good, no doubt, but I would rather wait till I see some good profitability
You can keep
numbers.
on waiting. I'll keep on making the gains. Yeah?
Okay, sure, sure. Indian hotels, the next stock on our watch list. This is again a play on the reopen trade as well as travel that's picked up in a big way. And despite, you know, all the talk about inflation, I think people are biting the bullet and still traveling a lot. You can see anecdotal evidence.
नहीं मैं खाने के बिना रह लूंगा, पर मेरे को जाना तो है वेकेशन पे.
बिल्कुल जाना है.
करके 2 साल में कहीं नहीं गया हूँ. मेरे को वेकेशन जाना है, मैं खाना नहीं खाऊंगा.
If you're a family man, then you would know, right? You know, you ultimately have to give in to the requests of your wife and kids. But
thank God I'm not. Thank God.
That apart, you know, the company has laid down some very ambitious targets for itself. It intends to have a portfolio of 300 hotels by FY26 and is also targeting an operating profit margin of about 33%. And given that the company's balance sheet is in a much stronger shape than it was at any time, and it is one of the dominant players with now presence across segments, I think this is a stock to clearly to watch out for.
But Santo, inflation still remains a concern. I mean, with cost of living rising the way it is rising, and we still know that the policy steps that are being taken, at least been taken from the government and the RBI side, will still take a long time to reflect in actual on the ground, right? So in that sense, if with such a sudden rise in everything that we are consuming, I believe travel will probably go down the list. Maybe 6 months ago, 1 year ago, this travel would have been probably at the top of the list of a lot of the consumers. But as we see the inflation start pinching wallets, I think travel will start going down, and therefore the optimism towards reopening may not play out exactly to the script, right? Apart from that, if you look at some of the indicators, fundamental and technical indicators that Moneycontrol Pro tracks, according to that, they are suggesting that investors should be a little cautious given the sort of topsy-turvy ride that the company's earnings keep on taking, given that hotels is largely a very cyclical business.
That is the nature of the business,
Exactly.
CJ. You got
so
to accept
therefore,
that.
this is one stock that has a very high risk, high reward, but sometimes the risk actually, multiply and therefore outstrip the rewards in most of the cases.
I didn't hear death cross today, CJ. What happened?
Thankfully, the stock is not in a death cross.
And
Apart
I
from
learned a new term from you today. That's the golden cross.
Yes, absolutely. I'll keep on teaching you these terms, although it
I
should be
have
the other way around.
I have plenty to learn from you, CJ.
That said, one stock that actually probably was, a collateral damage in the market today was Rupa and Company. Well, true, the earnings were not that great in Q4, but the overall, if you listen to the commentary of the management in terms of demand scenario, it was quite good. The outlook remained quite robust. But then the disclosures came in that their CFO and CEO have resigned, right? And this spooked investors because this move was very sudden. I mean, you saw the stock tank almost 20% at one point of time in the day. Then a clarification came in from the management suggesting that the CEO has resigned because of personal reasons, but he will continue to remain part of the selection process for the next CEO, right? Apart from that, the current CFO, who is actually also part of the promoter family, he wants to take his foot off the day-to-day, running of the business and focus more on the longer-term, ambitions of the company, and therefore retains himself as the whole-time director. At the other end, another employee of the company who was part of the finance and accounting department for more than a decade has been promoted to the CFO level. So there has been a reshuffling in the top management, but that I think there was probably a gap in communication of how the company could have communicated this better, because let's not forget that all of three of these disclosures actually just came as part of the earnings disclosure of the company, and therefore that spooked investors a lot. So in that sense, I feel that the 20% correction actually ended up being an opportunity for some of the investors to participate in the stock or gain entry in the stock, and we did see some of the HNI investors actually taking advantage of it and accumulating the shares around 18 to when it was correcting about 18 to 19%. As of now, it has come off significantly from the lows, but still remains down by more than 10% if I'm not wrong.
Well, the stock seems to be showing strength if you look at the last 4 months.
Yeah, it has been, because it's also part of the reopening theme, right? That we have talked. Offices are coming back. Undergarment sales are up because, of course, people are replenishing their wardrobe. So it is part of that reopening.
This is somewhat like tobacco, I would say. People can't just simply do without it.
Absolutely.
Although you once said that you are an exception to the trend. Never mind. The only thing that's caught my attention is that sharp rise in borrowings by the company. That's kind of more than doubled, but this could perhaps be an overhang, a sudden sell-off, and maybe you could see the stock underperform in the short term. But clearly, the fundamentals seem to be firm.
Yeah, fundamentals are intact, and that is why I said. I mean, look at the HNIs. They came out and said that probably one of the HNIs, who are very very well-known HNI investor, he came out and said that, okay, maybe my interpretation is wrong, but going by my understanding, I don't think this is as big a deal as the market is making out to be, and I'm actually adding to the stock. So, I mean, that is the beauty of the market, right, Santo? People can have differing views on the same stock or the same issue.
Divi's lab stock has been witnessing a sell-off since yesterday after it's announced its fourth quarter earnings. Now, the fourth quarter earnings were pretty good. However, most analysts are worried that the company has not given a clear indication in terms of whether it would be able to sustain the kind of operating margins and earnings that it saw previous year. There's wide disparity in the kind of estimates that analysts have put out for Molnupiravir. It's the COVID vaccine that boosted Divi's earnings last year. Now, interestingly, CJ, what you're noticing is that many brokerages have been bullish on the stock, but almost all of them have trimmed earnings estimates, and that varies from anywhere from 3% to 14%. So there seems to be at least unanimity that the company will not be able to kind of maintain the same kind of top line growth as it has been able to do.
So Divi naturally was one of the biggest beneficiary of the COVID wave, in that sense that it was one of the key suppliers of API, or what you call raw materials, that were used in COVID treatment drugs, right? Molnupiravir. And in Q4, almost 25% of the sales of the company were made up through the sale of this drug. Now, of course, going forward, the outlook, of course, for COVID treatment drugs is benign, given that we'll hopefully we are expecting that there will be no further waves and COVID cases will not rise, and therefore utilization will also go down. And I think that is where the lot of the concern has come in, that growth for the company will slow down in FY23. Some are expecting that EPS growth will largely remain the same as it was in FY22. So therefore, there is no reason why the stock should quote the multiples that it is quoting. But my argument here would be that Divi's is just not a COVID-19 drug treatment story, right? It was a larger story depending, on the API journey that India has gotten into, wherein the government is trying to make sure that India is self-reliant in terms of raw material for manufacturing a lot of formulation drugs. Now, in that case, Divi's, being one of the industry leaders, is a natural beneficiary and probably the biggest beneficiary of that API movement. Apart from that, yes, growth may slow down in FY23, but the longer term outlook for the company still remains quite strong. And I think that is the reason why brokerages have retained their positive view despite cutting their earnings estimate for FY23.
Well, what I can't make out, CJ, is that if everyone is positive, then who's selling? The stock is like almost fallen 700 rupees in the last 2 days.
Those are, short-term investors who probably would have taken position in the stock over the past 1 year, expecting, year-on-year gains. But now that earnings are not going to come through, possibly a lot of those investors decided that this would be the right time to take profit. Because remember, compared to global peers of Divi's correction in the stock, in the general market correction, had actually been much less than the global peers. So therefore, it had still restored or at least not led to a value destruction for a lot of its investors. So maybe a lot of them thought that given that the growth is not going to come in FY23 and maybe even FY24, it's the right time to take profit. But as they are taking profit, those who are bullish on the longer term potential will probably start accumulating the stock, and that is what I am expecting to happen. That said, one stock where another accumulation story developing is SRF, right? It has taken a beating this year because of concerns over margin. We have seen that across the chemical sector. Not only margins, but valuation also were quite pricey, and investors, as you have mentioned repeatedly, are not willing to give pricey valuation at this point of time. But that said, Morgan Stanley today came out with a report initiating coverage on the stock with an overweight stance, and they say that after 16% fall in the stock from its record high, they are now expecting as much as 18% upside in the stock going ahead in the next 12 months. The story is very simple. India is emerging as the next chemical hub.
Wait a minute, down 16%, then up 18%, which means that basically 2%, right? That's all?
It could be more than that. You look at the timing, right? If you buy from now, it's only 18% gains, right? If you're already bought, then there is no point in looking at Morgan Stanley's view, right? But this is for those who were waiting on the sidelines, probably waiting for that correction to happen and get into the stock, and maybe the opportunity has already arrived for them. That said, India is going to emerge as a chemical hub. Over the past 5 years, the journey for chemical companies has been amazing. They've doubled their profit, tripled their market cap, and Morgan Stanley believes that India's chemical story could be the way it was for European companies in the late 1980s and 1990s. And remember, they ended up not tripling actually, almost improving the market cap by 7 times in 20 years from 1985 to 2005 to 2007. So they are very optimistic on this. And for Morgan Stanley, among all the chemical stocks, SRF is the top pick, and I think that is probably the right call at this point of time.
Well, chemical stocks in general, okay, they've been a good story, but much of it has already been priced in. That's what I feel, CJ, because you look at the spectacular run-up in prices. You're not going to sustain these kind of run-up unless...
You can. If your profits are going to double in if Morgan Stanley's base case plays out, EBITDA is going to double in another 4 years. So why will stock prices not rise?
So when these stocks are expensive, it's better to give them a breather, wait for a while, and then buy into them.
That is what market is doing at this point of time, I believe. That said,
quick look at the market before we move on to our next segment.
I
market
think
still continues to be under.
Hold on to at least you have not fallen more, it seems, if I'm not wrong.
Sensex is down by about 275 points at this point.
Yeah, about 0.5 to 0.6% down on both Sensex and Nifty.
They've been tracking the weakness in Dow and Nasdaq futures.
Yeah, but Santo, concerningly, even Nifty Bank, which was actually holding fort, has turned negative now. It's about flat, but with a negative bias. So that could be, if the Nifty Bank gives its floor away, then we could probably be ending much lower than the current levels.
16,117 on the Nifty. It's still a good about 60 odd points from the day's low. So good recovery there, but the undertone still remains very bearish.
Yeah,
So CJ,
I wish it was green.
what is the nugget of wisdom that you have for us today?
Well, Santo, Moneycontrol's Nikhil Patwardhan and Chandra R. Srikanth have done a very interesting story today. They have basically, dug into data, spoken to industry people, and they have realized that the startup party that was, so loud and so clear in 2021 is now over. Why they say so? Well, because jobs are drying up in the startup space, layoffs are happening, there is funding crunch happening at this point of time. If you look at the numbers, about 5,000 people have been laid off across startups in 2022 alone at this point of time, and we are just 5 months into the year, right? And this is what six months still left, 7 months still left to go. So clearly, PE capital, venture capital, funding is not coming up. Of course, we know why, because interest rates are rising globally, equity market is going through a decimation, and investors, given that they are now risk averse, are moving towards bonds and more safer plays than towards riskier plays like startup. And therefore, this sort of an event is happening. And yeah, the decacorns and the unicorns that, were happening almost on a weekly basis, we were churning out unicorns on a weekly basis. Probably that story is now in the back burner, at least for this year. And, to talk more about this, Moneycontrol actually caught up with one of those unicorns, which is Zerodha, Zerodha's founder, Nikhil Kamath, at the World Economic Forum at Davos. And this is what he had to say.
We've had such a bull run in startup funding in India that, we will probably see some amount of correction in the pace of money that has come in. But I think par for the course long term, India still remains extremely exciting. You talk to anybody here in Davos, everybody's really excited about India. I would go to the extent of saying foreigners are more upbeat about India than Indians are upbeat about India today. So I think it'll be like a short-term issue, but long-term I think we should be okay. I don't think it would be right to critique industry hiring maybe 100,000 people and then firing 5,000-6,000 people, because I get that the impact is stark and acute on the ground, but relative to how well the industry has done, I think the correction has been nominal. So I hope things turn around. A lot of these people are in my ecosystem. They live in Bangalore, which is also where I live, and the pain is felt by everybody. But I'm hoping it's a short-term thing and things turn around fast.
Well, Santo, there you have it. Nikhil Kamath saying, he still seems very upbeat.
Yes, definitely. And it will be interesting to see how the other industries look at it, because this startups has been one of the reasons for the huge talent crunch,
Absolutely, yeah.
which most other mainline industries
you were getting 4 times, 7 times salaries.
Exactly,
in some
that
cases,
will
so
cool down
why
a
would
bit.
you not go, right?
And Chandra's story also mentions one thing that, despite this kind of meltdown and all, for the good talent will still remain scarce, and most of them will be able to find jobs, because there is still a talent crunch.
I think IT people will take them with open arms, right?
Already there are reports about, many of them making a beeline back to IT companies.
So I think probably in a contrarian way, probably IT, the margin pressure concerns that have dominated the narrative around IT stocks, that could possibly be reversing in coming quarters and coming months. So that is something to watch out for. Well, that Moneycontrol brings you interesting voices, and it will continue to bring you interesting voices like these from its ground coverage of the World Economic Forum at Davos. So do stay tuned to YouTube channel of Moneycontrol. That said,
Santo, CJ.
Santo, yeah, you only do the show. It's okay. You forget about me.
CJ, what do we have on the horizon?
Well, not much in terms of macro events, Santo, but earnings, of course, will remain in the focus as we enter the last few days of the Q4 earnings season. Coal India, BPCL and Bata India will be coming out with their Q4 numbers tomorrow. So they will largely be in focus among the F&O and heavyweight stocks out there. So yeah, that's about it.
Well, it's been a fairly mixed earnings season so far.
But Santo, we have still not seen the sort of downgrades that probably the current macroeconomic environment, as well as the margin pressure that everybody has been talking about. We have not seen those sort of downgrades.
Here's where we disagree, CJ. If you look at the reports very closely, they already started trimming EPS.
Maybe at individual level. But if you recently read a report by Kotak Equities, who basically did a Q4 review And they said that Nifty 50 companies have barely seen any downgrades, right? They have barely seen any downgrades. In fact, they've ended up seeing modest upgrades to EPS estimates for FY23.
What you're seeing is more of sectoral downgrades, like you saw in the case
Possibly,
of IT.
that is what I'm saying. Maybe in individual cases or maybe in sectoral cases, there are downgrades happening. But from at an aggregate level, at the Nifty 50 level, I don't think downgrades are happening at the pace that the market is fearing.
They are happening, CJ, just that they're not making a big show and dance about it.
We will know about, I think, June, after the June quarter, where the picture stands, because that quarter generally tends to set the tone for the rest of the year. And if downgrades have to happen, they will happen in the June quarter. But if they do not, this market could see a big reversal, Santo.
Okay, we'll see about that. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Hope you enjoyed watching it. Please do share your feedback on the show in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your news, do stay tuned to moneycontrol.com and the Moneycontrol app. We will catch you live at 9 a.m. tomorrow morning.